What's up, traders? In today's video lesson, I will be showing you how to execute trades on the 1 minute chart. So stay tuned. Now, today's video lesson is going to be covering price action that we saw during the course of this past trading week on the 2nd of August here on USD CAD. For reference, I am recording this particular video on the 6th of August 2022. So it is a Saturday, the markets have closed. And what I thought I would do is I would just review some price action with you guys, because I actually saw a very interesting scenario playing out here on USD CAD on the 1 minute that really ties into everything I've been showing you guys here on the channel. All right, so we are going to start on our higher time frame. So I show you guys how to build that higher time frame narrative, and then we're going to be taking it down from that daily chart all the way down to the 1 minute chart where we find our entry. Okay, now a very quick disclaimer: you do not need to trade the 1 minute chart in order to be a profitable trader. Okay, you don't need to trade the 1 minute chart to find high risk reward trades. The reason the 1 minute chart is beneficial is because it allows you the opportunity to catch that potential reversal in trend or continuation of trend at the lowest time frame possible. Because remember, markets are fractal, and your changes in trend will first occur on your lower time frame before they occur on your higher time frame. So being able to identify things on the 1 minute chart can help you get involved just a little bit sooner. But you need to be aware of the fact that the 1 minute chart is very choppy, it's very noisy, and if you don't know what you're looking for, and if you're constantly looking to trade the 1 minute chart, best believe that you will take a lot more losses over the longer run. So you need to be prepared for that. Me personally, I don't trade the 1 minute chart. Very rarely do I go down to the 1 minute chart. So diving into it here, and we're going to start off on that daily chart, as I said, USD CAD. And as we can see, price action has been in a very steady bullish push to the upside. This particular piece of price action is actually a complex pullback of a weekly range, but you can see that price action has been putting in higher highs and we've been putting in higher lows. So we can quite comfortably and with a lot of confidence say that price action has been pushing up, and more recently we can see that we have created this new bullish daily leg. We've had a bullish break of structure to the upside. Price action has formed a new weak high in here, and price action has obviously left behind the strong protected low down here. So the anticipation for this bullish leg is for price action, after it trades into discounted pricing, to now push up to potentially take this particular weak high, right? So our daily time frame is telling us that we are bullish. We can see that price has now traded into discounted pricing of this daily leg, and we can now start looking for those buying opportunities on our lower time frames. Okay, now it might not seem that obvious to you straight away, but what we have is here we have price action actually trading into this daily level in here. Now don't be scared to mark out supply and demand zones on your higher time frames, because once you drop down to your lower time frames, you can refine them, you can adjust them to get them absolutely right. All right, so but as we can see, price action has now traded into discounted pricing, and we have mitigated this daily demand zone, and that's why we've had this nice bullish reaction. Okay, so if we drop down to the 4-hour chart now, and I actually at this point want us to pull back price to the 2nd of August in and around here, because this is where the trade develops for us. What we can see is that this particular daily demand zone can actually be refined to this 4-hour level in here. All right, very valid 4-hour level. We can see that there was a lower time frame range that played out in here, right, and then it generated this particular 4-hour zone. So you can see the price action has pushed down into discounted pricing, has mitigated this 4-hour zone, and on its way down it has grabbed some nice liquidity. So understand that from this point, okay, if you are a swing trader, you can quite comfortably place limit orders, buy limit orders in here. You can look to cover the low. You could potentially look to give it a little bit more room. It all depends on your trading plan and what you've back tested, but you can look to enter off of this 4-hour zone at the open, and then you can look to aim for the week high. Now realize how this particular setup, depending on whatever rules you put in place, this particular setup could be a 10-hour trade, but that would be a 10-hour trade on a 4-hour chart. It will take a lot longer to play out. And even though you are playing this particular daily range, understand that just because we've had a mitigation of a demand zone within discounted pricing, that does not mean that price action can't come down and mitigate something like this, for example, because this is also a valid 4-hour demand zone that sits within discounted pricing. Okay, and then obviously you've got your extreme zones down here. So as I said at the top of the video, you don't need to be trading the 1 minute to be getting these high risk reward ratios. There are benefits and there are pros and cons to both, whether trading a higher time frame or trading that lower time frame. All right. So after price action mitigates this 4-hour demand zone, we can see that we have a really nice strong bullish reaction from here. That is now in line with what our daily narrative is saying. Remember that daily is telling us that we are bullish. We are anticipating this particular week high to be taken. So once we have seen that mitigation of that 4-hour demand, we can now drop down to our 1 hour and we can start to make a little bit more sense of price action. So here on the 1 hour, we can see that price delivery coming into that 4-hour demand. And we can see how price action was bearish at this particular point, putting in lower highs, putting in lower lows, until of course we see the mitigation of that 4-hour demand. And then once we get that strong bullish reaction out of the zone, we can see a valid bullish break of structure to the upside in here. Now, once we have that bullish break of structure to the upside, this is telling us that we can start anticipating a new range to form. So we've seen the bullish break of structure. We know that this is now going to be our strong low on the 1 hour. And all we want to see now is we want to see a new high form, because remember, after a bullish break of structure or a bearish break of structure, we want to wait for the formation of a new high or a new low. And how do we do that? We wait for that change of character on your lower time frame. And after that new high has been confirmed by the change of character, we can anticipate price action to pull down towards our discounted pricing, in this case because we have a bullish break of structure. And once price action pulls back to that discounted pricing zone, we can look to continue with that underlying trend. Okay, so before we dive in and look at where our 15-minute change of character could potentially result, we can already mark out this 1 hour demand in here. Very, very nice zone that we can mark out, because we can see that we had a lower time frame range that formed in here, and then price action generated this bullish engulfing candle. We have the imbalance left over. We have a break of structure. If you haven't, make sure that you watch our the most recent video that I posted, where I show you guys how to identify supply and demand zones using 3 simple rules. Based on those rules, we can quite comfortably mark this out as a valid 1 hour demand zone, right? So we have a bullish break of structure to the upside. We have already identified a valid 1 hour demand zone in here. Understand also that you can mark out this extreme demand in here on the 1 hour. We've marked out our break of structure. We've marked out our potential demand zones where we'd like to look for those trend reversals to come into. What we now do is from the 1 hour, we drop down to that 15-minute, and we want to now start looking for a valid 15-minute change of character. All right, the way I trade it, I like, if I'm looking at a 1 hour range, I like to look for a 15-minute change of character to confirm that new high for me. Okay, so there's my bullish break of structure. there's my 1 hour demand zone that I mapped out. What I now want to do is I want to focus in on price action in here. I mainly trade the London session and the open of the New York session. All right. So I don't look to trade anything during the Asian session because I regard my Asian high and my Asian low as really nice areas of liquidity that I want to see grabbed. So at this particular point, as you can see in and around here, if we just bring price back to roughly here, let's say 9 a.m. my time, this would more or less be the time where I come to the charts to start my trading day. And what we would have seen is we would have seen that price action has now put in an Asian high up here, okay? And we have put in an Asian low down here. Now, for me, what I would first want to do is I would like to wait for price action to develop a little bit more, because remember, at this particular point in time, I am waiting for a valid 15-minute change of character to occur in order to confirm that 1 hour high to give me the extremities of my bullish 1 hour range. And in here, we can already map out our first potential 15-minute change of character, because we have this break of structure to the upside followed by this break of structure to the downside. Now, for a change of character, a wick violation like this is more than enough to regard that as a change of character. It is only for your break of structure where you want to see a candle closure, okay? But for a change of character, a wick violation like this is more than sufficient. So once I have now mapped out this 15-minute change of character, okay, immediately the very first thing that you would want to see is, in order to confirm that 15-minute change of character, is you would want to see this low, you want to see a violation of this low in here, okay? So we have the 15-minute change of character, okay? This is the point where the 15-minute change of character has occurred, and price action, you can see, has had a bullish reaction. In order to confirm this 15-minute change of character, just to give you a little bit more extra confidence, you could wait for this break of structure to the downside before actually looking to trade this change of character, okay? So if I just drop back out to the 1 hour chart, and if I just show you now what we've just done on the 15, what we've essentially done is we have now mapped out the low and the high of this break of structure. So we now have a valid 1 hour bullish range that we are trading within. And essentially what we're looking for, because we have now seen this 15-minute change of character, essentially what we're looking for price action to pull back towards at least the equilibrium or discounted pricing of our new leg, okay, before price action pushes up to the upside to be again in alignment with that higher time frame narrative, which is bullish. However, understand that because we have now identified a 15-minute change of character, we can look for counter trend moves on our lower time frame as price action trades down towards our discounted pricing. All right, I'll say that again. Because we have now identified our 15-minute change of character and essentially our swing high point here on the 1 hour chart, we can look to trade counter trend setups to the downside as we anticipate price action to pull down towards at least this particular 1 hour demand zone, at least discounted pricing in here, before that underlying bullish momentum steps back into the market and we can trade that to the upside, right? And that's where looking for potential 1 minute opportunities can be beneficial, because it can help refine these potential counter trend setups just a little bit more. So if I drop back down to my 15-minute chart now, we can see that we have our swing high in place. So I'm going to mark this out as a weak high here on the 1 hour chart. And now that we have this 15-minute change of character marked out, we can now drop down to that 1 minute chart and we can look for potential opportunities. And if we look at the 1 minute chart now, we can quite clearly see that we have our 15-minute change of character here. Again, remember, a change of character is a break of structure. okay? But the rules we apply to a change of character is slightly different because that's what we use to help identify valid swing points. So we can see the break of structure to the upside, and we can see that here we have that break of structure to the downside. Now, immediately I want you to notice just how much more price action you see on the 1 minute chart compared to the 15-minute chart. And that's why I said trading the 1 minute chart is not for everyone, because there can be a lot of noise, right? There can be a lot of noise, especially if you're looking to trade this particular break of structure on the 1 minute. You can see the price action quite clearly breaks structure to the downside here, which would mean that you can look for something in here from a 1 minute point of view. You can look for price action to pull back towards this particular supply. Remember, all of your rules have been met. You have a break of structure, you have an engulfing candle, and you also have imbalance that is left behind. So this, for all intents and purposes, should be regarded as a valid supply zone. But what does price action actually end up doing? Price action ends up pushing up a lot higher and actually violates this particular 1 minute zone before pushing down lower. And that's why I said at the top of the video that if you look to just trade the 1 minute, and if you look to trade the 1 minute frequently, you will grab a lot of losses. Okay, now one pro tip for you guys here: we have our 15-minute change of character that occurs here. Once you drop down to your 1 minute chart, you want to look for the point where that 15-minute change of character originated from on your 1 minute chart. Okay, I'll say that again. Because we are looking to trade counter trend now, we have confirmed our high in here. We want to look for the supply zone. In this case, we want to look for the supply zone where our 15-minute change of character originated from. And the point where that 15-minute change of character originated from would be this 1 minute supply all the way up here. Okay, now let's see whether or not this particular zone meets our rules. Well, we can see that we have a large bullish engulfing candle after the zone is created. That's number one. We can see that we have imbalance that is left behind after the zone is created. That's number two. And then thirdly, we can see that we have a break of structure that results from this particular zone. Now, you can say that this is the break of structure. You can say that this is the break of structure, or this is the break of structure. It doesn't matter. The fact is that all three of our rules have been met, and this is a valid zone for us to trade from. One extra confluence that we can add to this particular zone is the fact that the zone actually swept something, right? We actually have a sweep of liquidity here, because remember, this is a 1 minute supply zone that we've marked out after this break of structure, which means that there'll be a lot of orders placed in and around here. So we can mark this out as liquidity, and we can see that price action actually sweeps this liquidity before this particular zone forms. So now what we can look for, okay, because we've identified the zone where our 15-minute change of character has originated from, we can look for price action to trade into this particular zone. And if we get a mitigation here, we can look to trade lower, all right? So all we can do is, at this point, after we've seen this change of character break and we've identified the origin of that, we can look to trade the open, okay? We can look to trade the open of this particular zone. So you can see that that's a 4.1 pip stop loss, okay? And what are we doing for targets? Now, one thing that you want to do is, especially in this scenario where price action has now quite clearly swept the Asian high, one thing you can do is you can look to target the Asian low all the way down here. Okay, so that Asian low would be roughly around 128.363. And the reason I say you can target the Asian low is because more often than not, you will have price action ranging during the Asian session. Okay, you will have the London push, and the London push normally takes out both sides of the Asian session. And then after the London push, you will have the New York reversal, right? It's just certain characteristics of the different trading sessions that we have, okay? So we have now placed a limit order at the open of our 1 minute zone, and we're looking to place our targets, or to place our stop loss rather, at the week high. The reason we want to put the target at the week high is because if this particular high goes, then this 15-minute change of character is obviously null and void. Why? Because then this would no longer be our valid swing point, right? It would mean that this did not push price down, and we would now have to wait for another potential swing point to form. Okay, so if we now just allow price action to push and to move, we can also see that we've identified this particular level in here. Now remember, as we said on the 15-minute chart, in order to confirm that 15-minute change of character, you can first wait for this break of structure before looking to trade anything to the downside here. All right, immediately, one thing that also stands out to me would be this particular level in here. Okay, so we would mark this one out, this 1 minute supply out, as potential inducement. The reason I say it could be inducement is because one of two things can happen in this scenario. Either price action pushes up, it mitigates this 1 minute supply and pushes down to violate this low, okay, confirming our 15-minute change of character, or price action could absolutely shoot through this 1 minute level, come up to mitigate this 1 minute before continuing to the downside. All right, obviously it could also just violate both of these and price action continues higher. So whenever you have a scenario like this, and this is where backtesting becomes very valuable, look to see when you're backtesting which of these zones price action reacts with more often, and then you can just look to play it. So if we allow price action to play forward just a little bit more, we've now identified a potential inducement. You can see how price action kind of just shoots through that 1 minute. It takes out all of the potential liquidity that would have been sat above here before rolling over. That isn't a coincidence. That is the market bringing more people into this particular scenario, taking a few more orders to produce a little bit more liquidity before the potential move, the actual move, to occur. Okay, so we can see that this supply has now been taken, liquidity has been grabbed, price action has pushed down. We've now obviously broken structure here. So at this particular point in time, we are still bullish. Now you can see also that this particular setup, if we just look to refine it a little bit more, this particular setup would be a 9.6 hour trade. Remember, on the 4-hour chart, we already identified there was a potential 10-hour trade that you could enter if you were trading from a swing trading point of view. But if we now continue to allow price action to push forward, you can see that we now have price action coming in and interacting with that 1 minute zone. So if we just allow price action a little bit more, you can see that it is hovering around here. We have definitely been tapped into the trade now. Now, understand that you also need to backtest and see whether or not you are the type of trader that would look to play the midpoint of a zone, or whether you'd look to play the open of a zone, right? In this particular scenario, we're playing the open of the zone. So you can see the price action has now tapped in to our zone. We have been triggered into the trade. And at this particular point, from a trade management point of view, you want to look for the point where you move your stops to break even, okay? Where you want to reduce some of your risk. Now, generally speaking, you want to identify the last swing point before you are triggered into the trade as your break-even point. And that would be this particular swing point here. This is the last true low before we are tapped into the trade. Some people would much rather look to mark this out, okay, would look to mark this out as their break-even point. But it is all up to you and what you've backtested and what you're most comfortable with. So we're going to allow price action to play on now. We can see that we have another run into our zone. So if you're looking to play the midpoint, okay, if you're looking to play the midpoint here, realize that you'd get a much better risk reward ratio. We've now gone from a 9R to a 12R position. Okay, we're going to keep it at the open, but you can see that price action now trade just a little bit deeper into that zone. If you don't have a good broker, you might get stopped out here with spreads. So it's very important that you also take spreads into account. We've got a 4.1 pip stop loss here. And if we continue to play price forward, you can see that we absolutely fall off a cliff of the price action trade just a little bit deeper into that zone. So obviously at this particular point, you can move your stops to break even, or you can wait for this particular point before you move your stops to break even. All right. Now, what I like to do whenever price trades to my break even point, I will move my stops to break even, and I will close around about 50% of my position, because at that particular point in time, not only have I secured some profits, but I am risk free. I can allow the trade to do what it wants to do without me having to worry too much about what is going to happen next. All right. So once price action has now reached our break-even point, understand and realize how we have now also broken structure to the downside. What this break of structure to the downside does is it now further confirms this as our swing high on that 1 hour chart. And we can now, from this particular point in time, we can now start looking to trade down towards this target here. Okay. One thing you could do is you could look for potential scaling opportunities. So we have a couple of scaling opportunities in here. We have this 1 minute zone here, and we also have this 1 minute zone in here. Now, scaling into a trade is it's another form of management that needs to be back tested. You need to have rules attached to how you want to scale into a trade. So what I'll do is I'm now going to just drop out to the 15 minute, and I'm just going to allow price action to play a little bit more. And notice how on the 1 minute, we saw so much more price action compared to the 15 minute, right? The 1 minute can be an excellent learning tool for just learning structure, okay? But we can see that we have this really strong bearish reaction after the mitigation of this 1 minute zone. And that is a trade that you would not necessarily have been able to trade or identify had you just been looking at the 15 minute. That's the trade-off between trading higher time frames and lower time frames. But if we allow price action to play forward just a little bit more, we can see that after price action breaks to the downside, we've moved our stops to break even. What price action actually ends up doing is we have a little reaction here to this demand zone. What price action does is it pushes up a little bit lower. You can see that we don't quite come to our scaling opportunities just yet. Price action rolls over a little bit deeper. So once you have this break of structure here on the 1 minute, because you are at break even, you could move your stops to this high. So if we just rewind price just a little bit, once you have price action break structure in here, you can move your stops from break even to this lower high in here just to secure a little bit more profits. Remember, if you took 50% off at this point, you would have bagged, let's say, a 1.9 R return there. And then once you move your stops to this particular point in here, you just secure a little bit more profits, and you're leaving your remainder on as you're targeting this. Trade management is far reaching. There are many different ways that you can manage a trade. What a lot of people would do is after they see this break of structure, not only would they move their stops to this particular point here, but they would also take another 25% off and just leave the remaining 25% on to target this low, right? You could move your stops to here, and then obviously as you see price action after the break of structure, we get this massive spike in price to the upside. And what this particular spike in price action does is it actually goes ahead and it targets our week high. Now, from a 15-minute point of view, this particular push to the upside, because we do not break and close above this week high, I would still regard this as my swing point, and I would only deem this as a liquidity sweep, because what price action actually does is price action pushes up and then it immediately comes back down, right? So from a 1 hour point of view, if I just zoom out a little bit more, this is not a break of structure for me. This is just a liquidity sweep. My high is still in place. I'm still anticipating price action to potentially pull back towards here before continuing, right? And if we just allow price action to do just that, and if we allow price to come back a little bit more, you can see that that's actually what price action does, all right? It sweeps our week high, right? The week high is still in place. We don't have a candle closure above. And then price action continues to roll over, push down towards the zone, okay? Now, this was just a little bit more of an in-depth look into how you can use that higher time frame narrative to help identify potential opportunities on your lower time frames, especially in this case where we use that higher time frame narrative to look for a potential counter trend setup. So here we're going short, even though our higher time frames were pointing long, right? I hope you guys found this video helpful. I hope you found it insightful. Definitely make sure that you watch it a couple of times, because once you understand the concepts that we spoke about in this video and understanding that higher time frame narrative, knowing how to identify a valid swing point, knowing what a valid supply and demand zone is, once you understand those concepts and once you put them together, you can execute a trade on any time frame, even the 1 minute. All right, if you guys found this video helpful, please make sure that you hit that like button. Make sure that you subscribe to the channel so you don't miss out on any future content, and I'll see you in the next one.